often with a business valuation, whether it be you're wanting to buy a business or you're wanting to sell a business, you need to know for how much, and is the price that's being offered or the price that you're trying to sell it for going to be something that can be backed up by the financials and by the business itself. So it's not only at those times of your business life that you may want to do a business valuation. During the life of you operating a business, you're wanting to build up your own assets, build up your own wealth, and as you're planning for retirement and ultimately selling your business, have you got enough assets? So during the life of your business, it might also be a good time to value your business at that time to see, are you progressing along in the fashion that you desire? Often it's dependent on the style of business itself. If you have a fairly common business like a news agency, there are rules of thumb. So when you look across all the different news agents, there's a common multiple that you can apply to maybe the lottery turnover or the newspapers and cards, and from that a fairly simple calculation can be done. But if you've got a reasonably specific or a niche business where there are not many others, one of the more common ones is discounted cash flow analysis or future maintainable earnings. So once you look at your profit and loss and take out all the bits and pieces that are specific to you and your own entity setup or your own personal circumstances, you should have the raw business numbers. And then depending on can that be replicated year after year, you then apply a multiple which the purchaser may be comfortable in paying for that income stream because they'll be able to generate a certain return on their investment. And that's what's going to be important to the investor, being able to not only get a decent return, make a bit of money for themselves, pay back the finance if they've had to borrow to purchase it, and ultimately have a successful business. Certainly in trying to work with a client on a business valuation, you would like the ability for the business to have up-to-date financials, so then you can see what historically the business has performed and how it has built up assets, how it has generated cash flow. But then certainly going forward, if you are going to use a method like discounted flow, you're going to need maybe a budget, maybe a cash flow forecast. So certainly in terms of businesses where they do have a list of clientele and they're repeat customers and can be relied upon to continue using that business, irrespective of whether or not the business owner is there, then you can have a look at the forecasts and budgets to perhaps see what future value that this business is going to be able to generate. And that's ultimately what's important is, okay, if there is an element of goodwill, the business has a good name, budget-wise going forward, it looks like it should be profitable, then it's going to be a little easier to analyse. But if you come back to some businesses that might only have the relationship with that owner and the goodwill of the business moves in and out of the door each and every morning and night, then you're going back to what are the assets of the business. So you might just be looking at what's your level of stock, what level of debtors and creditors do you have, what are the levels of plants and equipment that you employ in that business, and what's the valuation of that if a new person was to want to start up and continue that business, what is the value of the equipment and all the assets that they need to buy in order to operate that business as you have. In order to value a business, certainly each individual business is going to be different. If there are rules of thumb you can use, it will be a little bit quicker, but if you're going to have to look specifically at the budgets, the cash flows, look at the assets and make valuations thereof, then that's going to be communicated when we catch up to try and identify a timeline that's going to be realistic for that individual business. We certainly have a good relationship with our clients, and we like to work closely with our clients in order to come up with solutions that is not only understandable but certainly going to benefit and find value for the client.